Hello everyone, this is Singutwan. I was part of the team that emerged as national winners in the last edition of GMC India, and we also had the opportunity to represent our country in the international event held recently. And through this video, just want to share some of my experiences and learnings of playing this game, so that it will be useful for the upcoming challengers from this year. So let's quickly go into the introduction. By now, most of you would be aware of this game basics. Like it is a business simulation game which is working on a virtual business environment where we have to produce three different products and sell it in three different regions like Europe, NAFTA, and England. There are 75 decisions which we are expected to make, and the management reports are the medium through which we come to know about the progress of our companies, financial statement, etc. And decision form is the portal through which we enter the 75 decisions. And I would advise everyone to go through the manual at least once so that you can understand the various nuances involved in the game, which will be very useful to play the game. So the winning criteria of this game is based on the investment performance. Investment performance takes into account various factors like share prices and cumulative profit after tax. And it from the manual you can understand how the investment performance is calculated. It is just the market valuation of your company along with the dividends issued adjusted with the shares issued and repurchased. So let us see this with an example. So this is a management report of a game where you can see market valuation and investment performance are all the same for all the companies except company 4. You can see this market valuation, how it is derived. You can just multiply this ordinary share capital into the share price, which will give you your market valuation. And because the other companies have not done any share activity or the dividend activities, their market valuation and investment performance is the same. Whereas for this company, you can see market valuation is higher and share price is also higher, but you can see the difference between these two is almost equal to your shares issued value. You can see that the value of shares issued here you can see is like 432040, and the difference between the investment performance and market valuation is 433120, which is almost like minimal. So basically your whatever shares were issued will get subtracted from your investment performance. So coming to the dividend case, you can see again those companies that have not done any dividend or share activity, for them market valuation and investment performance is the same, and market valuation is nothing but your outstanding share capital multiplied by the share price. So this company one, you can see they have issued 1% dividend. 1% dividend matlab the 1% of your ordinary outstanding share capital, which is 40,000. So you can see the difference between the this one will be 40,099, which is almost equal to your dividend issued. Likewise, for company 6, you can see they have issued shares and also dividends. So this calculation gets complicated further, but you have to simply understand that how the investment performance is calculated. So it is just market valuation plus dividend minus or plus shares issued and repurchased, where the market valuation is just your share price into outstanding share capital. So you can see when shares are issued, your share capital will increase, but the value gets deducted from the investment performance and vice versa. But when the share price is increasing due to various other factors, so when the we have issued shares means that that time market valuation will be increasing multifold, so that will be an added advantage for us. So we can understand that share price plays a major role, and how the share price is calculated is by various factors. From the manual they have listed around 11 factors. You can see the general state of economy and current bank interest rate will be common for almost all companies, so we can ignore those things. So these 8 factors are the major factors that affect the share price, like net asset, current profitability, dividend, etc. Among these things, the major impact is from your net assets and the amount of profits you make. And you could have noticed that market share also is one of the factors that influences your share price. So general strategy that I used to follow, or I would advise you to follow, is like you should not go for a higher price and higher profit with low market share, because you may get higher profit, but lower market share will impact your investment performance in a negative way, and which is bad. Likewise, reverse is also not true. Matlab, you cannot reduce prices and go for lower profits and have high market share, aiming for good share price from market share, but that is also bad. So better strategy and optimal strategy would be to price optimally with higher profits and higher market share. So like the to understand this better, I would like to explain it with this drawing. Like whenever your production is increasing, your marginal revenue will start reducing. So you can refer this concept from the website. From Google, you can check how this basic thing works. But what I'm trying to tell is that as the production is increased, your cost will rise and revenue will reduce. Marginal revenue will reduce. So there will be a point of maximum profit, which is very difficult to attain in even the real market as well as in the simulation. So we have two choices, either to go on this side or go on this side. That is, if you go for a higher pricing and lower production, you will be here. If you go for slightly lower price and higher production, you will be somewhere here. So between these 2 points, I would prefer staying here rather than here, because both these points profit will be same, but at this point you will have a better market share. So your share price will be increasing more. So you have to also make note of few things, like there are many interlinked factors that contribute to share prices. So like when you give dividends, the share price will be impacted positively, but that will reduce your net assets and reduce your liquidity as well. So and likewise, your higher product quality can be achieved by going for higher assembly times and higher investment in R&D, which will effectively reduce your net assets. So the impact by increasing quality will give better share price, but at the same time net assets will reduce and that will impact your share price. So it is an optimal decision that we have to take. Likewise, more resources also is a factor. Again, when you have more resources, you have to pay more income, more salary to them, and which will affect your net asset and liquidity. So you have to make an optimal decision that doesn't compromise on anything. So main objectives would be like go for try to make higher profits with higher market share and issue shares whenever possible, because you can only issue maximum 10% in a financial year. So generally there is possibility to issue shares twice within in the game. So we should utilize both the opportunities, and you should also issue dividends as much as possible, and better to give gradually increasing dividends rather than erratic ones, because in the manual it is clearly mentioned that erratic dividends will have a negative impact. So the game strategy, how to go about the game is like you should be able to predict what kind of demand you will be getting in the current quarter, and accordingly you have to optimize your supply position and you have to plan for the resources for the future quarters as well. So first and foremost thing that most of you would be interested to know would be how to predict the demand. So demand prediction works on this basic concept, like your order inquiry of the previous quarter acts as a base, and whatever decisions you are making in this quarter in relation to the last quarter, what that will have an impact of change in demand. Like every decision will have some impact in the demand for this quarter. So the net change in demand will be have calculated, and the net change will be having impact on your demand for this quarter. For example, you don't make any change in any of the decisions from previous quarter, from the history or previous quarter to this quarter, but still there will be some change in the demand. That is called as seasonal change in demand, which will be fixed by the game organizers before the start of the game, which they also won't interfere in between. So this cannot be predicted, and maybe with the previous game experiences only we can know like how each scenario will pan out. But even if you play the same history again, the seasonality won't be the same, it will be different. So like there is no fixed strategy to predict this one. So what to do, like as I told, your expected demand for this quarter will be depending upon the orders received in the last quarter plus the total change in demand expected in this quarter based on your all other decisions, like for all the 9 areas, 3 products in 3 regions. So you have to make this kind of a prediction here, like what will be the change in demand. So this change in demand will be the sum of change in demand due to various factors that are all the basic whatever decisions we are going to take in this quarter. So let's see two or three things in that one. Like for example, seasonality is, as I told, seasonality is something you cannot predict, but you can just roughly assume something based on your history data and or the previous games that people have played. So this is something we have to assume that we don't have a choice. So other things we can somehow have developed some kind of a model. Like if you change the if you increase the price, there will be change in percentage demand for this quarter. Like if you raise, it will be reducing, and if you reduce the prices, there will be an increase in demand. So you should be able to make some model like this. And when it comes to R&D, like whenever you have a major implementation, there will be proportional increase in the demand. So that also you can, this 11% is like not the correct one. I am just assuming 11%, maybe 8 or 10, something like that. And like that, every other parameter also will have an impact. Like if you see, if you change the commission for the product, there will be increase in demand. And likewise, your agent support. If you change for the agent support, proportional change in demand is there. And management budget will have an impact in all products equally. Like whatever change you are having, it will be there. And the next important thing is direct advertising. Whenever you change the direct advertising for a particular product in that particular region, there will be change in demand. Only difference here I would like to tell is, for all other factors, the change in demand will be affected in terms of percentage. Like you can calculate using what was the change in percentage between these two values multiplied by approximate sensitivity, you can arrive at the change in demand. Whereas for the direct advertising, it will be like whatever is the change in increase or decrease. Directly, you have to multiply it with the sensitivity, and you can get approximate change in demand. So based on whatever decisions you are changing, we should be able to predict the total change in demand, and that would be our new demand for the quarter for which we are playing the game. So I have just compiled the various history data of 5 quarters for, because like everybody will be interested to know how to predict what kind of seasonal changes may be there. So if you can see 15C1, 16C1, 17C1, all these three cases are having a different kind of sales in the various regions. A number of machines you can see it is less. Assembly workers are also less. Whereas 14C3 and 18C1 you can see the total production in history itself is very high, with more machines and more workers. So what it means is that 15C1, 16 and 17C1 are all referring to startup companies with huge growth opportunity. And you can see Europe is already close to mature market, whereas NAFTA and internet markets have huge potential for growth. Whereas 14C3 and 18C1 are already established companies with more machines and assembly workers. So all three areas are almost mature. So seasonal change will be gradual, generally in the range of plus or 20, plus or minus 20%. Whereas in this one, you can see you can expect uh, high growth in NAFTA and internet. But at the same time, let me clarify here, there are various scenarios in which they will make the startup as a failed startup. Like there is potential for growth, but in that game it might not have grown. But the thing is, like, it will be same for all the competitors, so it doesn't matter. But you have to recalibrate your strategy after the maybe first quarter results have come or second quarter results come. So this is one idea from which you can try to predict the seasonal changes. So having arrived at the demand, expected demand, you should now go for optimizing your supply position. Like we have limitation in machines and assembly workers from the history. So the first decision, everybody has the same limitation. Whereas going ahead for the second, third, fourth, and fifth, it is in your hands. What do you want to do? Whether you want to go for more number of machines or how more number of ships, or how much you want to produce. Then accordingly, do you have the assembly workers to supply? So these things you have to plan, and you have to recruit to go for recruitment of assembly workers or going for machines. So here I would advise, like, you can go for increasing the number of shifts, or even go for subcontracting where by product outsourcing, so that you need not produce in-house. And the other thing that you have to notice like truck loading. You have to try and avoid part loading of trucks. So what do I mean by this part loading is, like, So this was the, for example, this is the orders on the last quarter, and by my projection, this is the expected demand. And I have calculated what will be the number of trucks which will be required for transport. You can see 7.53, which means eighth truck is partly loaded in this one. Likewise, the second truck is partly loaded. Here, fifth truck is partly loaded. So instead of going for production as per your demand, you have to try and round up the production so that your trucks don't go empty. So that this can even contribute in your extra sales, or it can be stored as warehouse for the next quarter. So it will be useful. And this will also minimize the cost to some extent. And as I told, there are various parameters. By changing each and every parameter, we will be having a change in demand. So instead of changing the parameters frequently from quarter to quarter, it is better if you can change the decisions in the first quarter and keep them constant for the remaining quarter, so that you need not worry about predicting the demand every now due to all the parameters. You can only play with direct advertising, prices, and your projected seasonal changes alone, rather than taking into picture everything. So coming to resource planning, the assembly workers recruitment is tricky one actually, because whenever we go for recruiting, we may not get the required number of assembly workers. That may be due to various reasons like your wages, not only wage rate, average wages, and the general organizational environment, like the quality of products you are producing, quality of training you are providing. This will be also decided by management budget, like how you are managing the total company. So whenever the unemployment rate is low, then it will be difficult to recruit. But if unemployment is more, naturally you will have free people in the market and you will get your assembly workers as per your plan. But when an unemployment is not there, then it will be competing among the companies in your group. So whoever is having a better organizational environment, they will be able to recruit more workers than you. And sometimes assembly workers may leave our company and join them. So this you may have to invest in various parameters to ensure that your assembly workers recruitment doesn't get affected. And likewise, raw material procurement also, it is always advisable to procure 3 months and 6 months future raw materials, so that you can buy them at a lower prices. We have seen almost in all the cases we have played, the future prices are always low. There we haven't so far seen a case where the future prices or the spot prices go lower than the future prices. So it is always better to buy 3 months and 6 months raw materials in advance, so that you avoid spot prices. And likewise, subcontracting also you can use to optimize your resources. Like you need not spend more time with your machines. Instead, you can go for component procurement, and you can also plan to buy components for all the 5 quarters in advance. And one major thing you have to take care is the factory expansion, because your machines and assembly workers and raw materials need space in your factory. So if the factory space is not sufficient, then your assembly workers recruitment will be affected. Like if you don't have, so you have to project how much assembly workers you are planning to recruit, and you have to expand your factory accordingly if it is not having the sufficient space in there. So these things you have to refer the manual again. So the general other factors that we have to take care is the factors that are influencing the share price will be your cash flow. Because liquidity means your cash flow statement. So if you have to try and calculate how much cash you will be having at the end of the quarter after whatever sales you are projecting is happening. You should always try to minimize bank ODN loans, because whenever you go for ODN loans, it will have a negative impact in your share price. And also your backlogs. If you are getting backlogs, it will impact your share price in a negative way, and also it will lead to lower demand in the subsequent quarter. So you should always plan to have inventory and try to avoid backlogs. So all these things I will generally sum up when the various points like this. Like you have to assume a seasonal demand based on trial round or your previous experiences, or with the tips that I have given. based on the cases, whichever scenario you are playing, you can try to predict or project what kind of seasonal demand will be there. And it is better to plan for all 5 quarters if possible for the future, and buy raw materials from the future markets, and go for subcontracting, so that you try to operate from single shift operation from the second decision itself, because single shift is always cheaper than two, and two is always cheaper than three. So the lower number of shifts you operate, you pay less for your labors. And as I said, you have to increase your management budget, training budget, your agent commission, assembly time, etc. in decision one, and try to not change them further. And accordingly, for when you have to increase your website development and number of ports in proportion to expected internet sales as well. And whenever you are trying to recruit assembly workers, if you feel you need eight workers for the next quarter, always it is better to put 10 or 11, so that 2 to 3 you put more. Even in case if it is not recruited 100%, at least we can have the required number of workers for the next quarter. And yes, this one better you have to make an Excel model for all 5 quarters in advance, rather than just one single sheet where you are working, so that you have to predict what kind of behavior and what kind of raw materials you need, what kind of workers you need. So you have to have all these things in advance for the first quarter. Try to calculate the cash flow with a conservative sales rather than actual projection of sales, so that you don't end up going into overdraft or loans. And in some of the cases, there is a more chance that you may have cash flow shortage in first decision. If that is so, you have to see and take out money from FD to avoid OD and loan. No point in having money in fixed deposit, and on the other side ending up paying overdraft or loans. And you have to try and issue shares, at least, preferably in the first or second quarter, second decisions. Obviously, they don't have any impact in the investment performance, but they can be an option to generate cash flow also. And one more issue will be possible, preferably in the last decision. There will be at least 2 issues are possible in every game. And try to issue dividends as early as possible, and plan for a gradual increase every quarter. So these are the pretty much things. If you can take care of these things, I think you can perform well in the competition. So with that, I would like to conclude this video. And in case if people feel that there are some more things which you may want to ask me, like maybe you can leave a comment. I will see if I can come back and put another video or something like that. So best wishes for the challenge. And like every YouTube video, just let me conclude, like, please share it to your friends whom might feel it is useful. Thank you.